The waiting is the hardest part. Hey, it's Eric Ostis here with Homebridge Financial Home Mortgage with my weekly update on mortgage rates, the economy for the week ending March 3rd, 2023. Wish I had better news for mortgage rates for the week, but alas, not quite yet. Stubborn economic statistics and some unprecedented population adjustments to the data put bonds in a defensive posture for most of the week, pushing rates a little bit higher. Let's be clear. The Federal Reserve wants to keep rates elevated until the economy slows, which in turn will reduce inflation. That's their goal. But don't take my word for it. Let's take a look at what some of the Fed governors have said here recently. So the Fed Governor Kashkari, just this week, if we declare victory too soon, there will be an outpouring of exuberance and we'll have to do even more work. Fed Kashkari, underdoing it poses a far greater risk to the U.S. economy than over-tightening interest rates. As you can see, the Fed is pretty much hell-bent on slowing the economy. Most likely that will thrust us into a recession. And about those statistics, a major component of one of the main inflation statistics, consumer price index, is shelter. Shelter includes rent. It accounts for 33% of the CPI index. It used to account for only 29% of the index, but the weighting was increased last month, making CPI, you guessed it, look worse. The problem is that shelter is a lagging index. It runs behind the Fed and runs behind the CPI index. So for example, if we look at this, for the last year, the cost of shelter has been declining, but the component of CPI for shelter has been increasing. That's because shelter is a 12-month lagging index as used by that consumer price index statistic. So the good news is that we expect to see that statistic start to turn this month and continue to head lower. Reducing those CPI numbers, fingers crossed. For now, bonds are waiting for next week, jobs week. The fun starts Wednesday when the ADP job numbers come out for February, expected to show about 185,000 new jobs. Then on Friday, we get the Bureau of Labor Statistics, BLS, releases of its job numbers and unemployment, expected around 200,000 jobs, and unemployment to remain pretty much unchanged at about 3.4%. But unlike last month, there will be no additional special adjustments to that data. And we think there's a pretty high probability the numbers could end up even a little bit worse than forecasts. That would be good for mortgage rates and give us some much needed exuberance. Sorry, Fed, but we're pretty much fed up at this point. So for the week, mortgage rates slightly higher. Let's take a look at the national averages. 30-year fixed rate conventional 6.97. We did inch over 7% mark a little bit earlier in the week, but we rallied here Friday afternoon. 15-year fixed rate 6.43%. FHA and VA 30-year fixed rate 6.39 to 6.45%. 30-year fixed rate jumbos 6.45. 5/1 ARM I don't really talk about too much because there's other ARM options out there and a lot of different ARM programs available that could be a little bit lower than that. Now moving on, these elevated rates are good news for buyers. What? Yeah, I said it. These elevated rates are good news for buyers. Why? Well, at the beginning of the year, we saw a surge of pre-approvals as buyers re-entered the market. We saw purchase activity increase, but with the rates still elevated, many buyers are still sitting on the sidelines. Sellers know this, and they're much more flexible right now on price and more willing to pay closing costs, which can be used to buy down your interest rate and help with that affordability. You can see it in the statistics as well. So if we look at our local market, King County, sort of King County area, 95% of homes, homes are selling for about 95% of their list price. which is good news. That means there's a little bit of softness in the house prices, not a ton. The median house price is still up there around 781,000 for our area. But look at the months of supply. There's only 1.2 months of inventory available right now. That's really, really low. However, we should see that number start to improve as we enter the spring home buying season. So if you are a well-prepared, fully underwritten borrower, it's time to take advantage of those softer prices and get some closing costs paid. Rates will fall soon. We're confident of that. So get a good price now and refinance, when they finally settle down. I'm here and available. Call me to start your pre-approval or answer your mortgage questions. But most importantly, let's put a plan together to achieve your home buying goals for this year. Well, that's all I've got for this week. I hope you have a great weekend. I'll be available. Let me know if you can reach me. If you have questions, call me 206-915-3742. That's 206-915-ERIC. You can email me, eric@ericismybanker.com, or check me out on social media. Be sure to subscribe to my YouTube channel so you get my weekly updates. Just look for Eric is my banker and you'll find me. Have a great weekend, everyone. Talk to you next week.